Thanks, guys. Thanks for joining me up here. We've got the seat for the visitor. For anybody that wants to come and join us, please do. Let's take a minute or so. Basically, introduce yourselves. So tell us a little bit about what you do, and just grab a mic there. And all right.
Arnaud Vincent. I'm the founder and CEO of Aviomex. We are expert in disruption innovation.
My name is Stefan Jorgensen. I'm the CEO and founder of Aviomex. We build a platform to essentially track all the transactions that happen in the world and make it very easy for any company that needs transactions to run, to get access to it. And probably I should specify that we're focused on SKU level data on the transaction side. Company is based in Berlin and San Francisco, and actually Mark told me I had to tell you guys that I'm besides having worked in e-commerce for the past 15 years, I'm also a lawyer by actually education focused on data privacy, so which is something we spend a lot of time on when thinking about everything that we work with.
Hi to all, my name is Cristiano Motto. I'm the head of information management Europe in Barclays. My team is in charge for leading the data strategy, starting from the very early stage, data warehouses, data mart, up to big data and new frameworks. And on top of that, the analytic framework from standard reporting, business intelligence, up to artificial intelligence, machine learning, and new algorithms that we are now developing on the bank.
I'm Anatalio Ubalde. I'm the founder of SizeUp, and SizeUp helps banks and financial institutions better serve their small business customers. And the way that we do that is by bringing the type of market research and intelligence that typically only huge corporations have access to, and we put it in the hands of the small businesses.
Thank you.
Hi, my name is David Sosna. I'm the co-founder and CEO of Personetics. What we do, we provide real-time advice for customers around retail banking, and we use real-time transactions and market data to provide predictions about what to do with your money. The focus of our business is not robo-advising, but actually day-to-day life. What should you do with your next available €5? Should you pay your credit card? Should you actually save it? Or maybe you should stop spending right now?
Thank you. Thanks, guys. The first question is really, what macro trends are you seeing at the moment that could potentially disrupt the banking industry around big data, AI? What are you noticing? Oh. You want to kick off, Dave?
Well, I'll start. Well, like everyone knows, banks and fintech are looking at the digital instrument a lot. What is missing here is that in many cases the digitalization process is seen like a business process. In reality, that's not the case. The digitalization is a holistic process. All our society is moving to digital. So we are meeting people on Facebook instead of at the pub. We are talking with our friends. We are buying. We are choosing. We are acting in the digital world. What banks and fintech, from my point of view, has to do, and what Barclays is looking to do, is to start looking at the digitalization in a wider, in a more realistic way, and leverage the power that the data that are there are enabling. More or less, the 80% of our life is already encoded into digital streams that are there and are describing ourselves, who we are, what we are doing every day, every moment. And the capability to use new algorithms that could unlock the value of this data, bringing new insight to the businesses is very strong, and that's probably one of the trends of the very next future.
Arnaud?
I would say that especially in fintech, I think that the bank and insurance company have to begin to trust into artificial intelligence. Well, this is for the first time this year. The discussion we've got with big clients, they finally accept to They finally accept not to understand what the algorithm is doing, and to trust only on the results and not on the way the result is produced. And this is something completely new for bank and insurance. There is some issues toward the regulation and the compliance, because in the compliance you have to explain everything what happened on your system. But I think that this is just the beginning of the EI revolution. And the first step is the chatbot, I think, because the chatbot is quite outside the regulation constraint. So I think it's why the banks and insurance begin with this technology, with this solution.
So I think something that's really happening and has been happening for a couple of years is something we call kind of the connected data economy. And to explain, I'm from Denmark, a small country, so normally what I'm saying is that you cannot really be successful as an entrepreneur in Denmark because it's too small, but it has some advantages having a small country like that. So 10 or 15 years ago, I think the government introduced a way that they wouldn't buy anything from anybody unless the suppliers would send them an electronic invoice. So they had to push the invoice into the system of the government, which was much more efficient essentially. And out of that came a company now based in San Francisco called TradeShift, which introduced that to big corporates. And what we've seen now 2 years ago in Denmark is I don't know if you've seen that, there's something called mobile pay, which was introduced by Danske Bank, the largest bank in Denmark, and they didn't expect much from it. They expected to get a couple of 100,000 users on it, so you could basically pay your friends with your mobile phone number. And what happened was that now, I think it's 2.5 years ago it started, and now there's 3.5 million users on that product, and there are 5 million people in Denmark, so that's quite like a lot. And now all the other banks turned around and started using that as well. And essentially what it does, it connects the payments together between the people. Now a lot of retailers started using that and stuff like that. And I think that kind of trend, big data is one thing, but you need to be connected into an ecosystem. And I think this is really important and something that's happening in a lot of places, and especially also now in FinTech starting to happen more and more.
I think that the data availability has been changing dramatically. It started off by customers allowing startups to grab their data using aggregation, using other type of technologies, and that made a lot of opportunities, created a lot of opportunities for companies to try to compete with the banks, to give you a loan, to give you financial information. Now that created a trend that right now Silicon Valley comes up with solutions for personal advice, for financing, for robo-advisors that are scaling for lending, that are scaling the banks. So then the banks are now starting to push. They understand that the digital engagement, the digital interaction has to be on the same level because they're going to lose the customers. So now they are actually also pushing. I think the second trend is really the ability to run these type of processes. Just to continue your presentation, we have right now a bank in the United States, and we are serving over there 20 million digital users. And every time the user logs in, we have to run a full calculation 6 months backward to see whether we have payments that, based on patterns, are about to become due, and we're looking for opportunities of cash flow. This type of calculation was been science fiction 5 years ago. But with the fact that you have these non-SQL databases, that you can pull everything into memory, that you can put a lot of these VMs, you can actually try to present solutions that are right now in the area of AI. And it's because of data availability, it's because of the speed, and then it allows you the ability to run algorithms almost at the point of interaction.
So a trend is that I think there's also a change in the expectation of what a bank should be and the services and products that they can deliver, and data is a part of that, right? So you're seeing that with many of the fintech and bank apps that help people achieve financial goals. Or if you're a business, how can I save to buy the machine that I need or the equipment that I need? Or on the advisory side, data, the research is showing that is something that is a differentiator for banks in a commoditized space. And then also an understanding, certainly on the business side, that the bank's business customers have a lot of different needs that go far beyond traditional banking, where they put their money or getting a loan. And so, so also, how do they help with issues related to revenue or sales growth, or the things that are really keeping the businesses up at night? And I think that data is key to understanding and potentially really solving some of these issues. So I think there will be a new version of what a bank looks like and what it delivers.
With this rapid change that we're living in at the moment, you've got large organizations, banks and insurance companies specifically, they're not known to be agile. So Arnaud, a question for you. How can these large incumbents begin to embrace this change or engage with it? Because I think there's a natural resistance, or to sort of pull with a duvet and pretend it's not happening. But how would you recommend folks engage in that way?
I worked during 5 to 7 years in a big bank, and as a chief innovation officer. And one part of our job was to 10 years ago to kill the fintech. It was, yeah, I would say, well, that's and so I think there is two steps in the process for a bank or an insurance to deal with data in order to innovate and disrupt. The first step is to separate the data of its purpose. I've got a cool example there, because I saw in Riviera level the connected basketball. It is thanks to the special ball, the player gets all the statistics of his shot, speed, numbers, successful, standard shots. Okay, that's a cool object, but the data has got a purpose. There is a tracker inside the ball, and the purpose is for entertainment. But those data could be also used for targeting, maybe to know when you are playing basketball, for scoring, are you aggressive when you play basketball or not, for authentication, the way you are playing with the ball could open a bank account, because the system recognizes that you are the only one that is playing basketball like this. And why not deal with chatbot parameters? Because in a sense, when you play basketball like this, it's better to speak to you in a specific way. So this is, I think, the first step is to separate the data of their purpose, and then think about pattern function. This means that a system that is able to deal with the data and having a pattern function that bring the data to several purposes.
Thank you. I want to open up to the rest of you guys. What do you recommend, or what would you say to a large incumbent today?
I actually want to attack it from a whole different level. I think what the banks need to understand, that they need to partner, they need to open up. And I think if you take it really high, you have to think about the things that they need to do and how should they go about and do it. So I think that the first thing they need to do is understand that they need to open up and create some sort of an interface that companies come from the outside, connect to their data and do something. Yes, they're still not able to send the data outside, even in 2016 and probably going into 17, but they can create data interfaces to allow folks like ourselves to go in and connect and then actually work with them. The second thing that they need to path to evaluate the algorithms. You mentioned the fact that they're actually very comfortable or starting to get comfortable looking at the results. We're still fighting that. We're showing them results of algorithm to do prediction, and they're looking for the rules. And so the best way to do it is actually to go into testing. So they need to also prepare a path, not just to technically integrate, but also how to launch it. Can they now go and do 5 tracks in parallel and take 5 different services, launch them, introduce them to 1,000 people, measure the results systematically, and understand that it's working or not? These type of methodologies require them to think about the change. And some of them are doing it, but definitely not all of them.
Are you seeing them resisting opening?
Absolutely. I think that...
Why do you think that is?
First of all, a lot of people want to keep their job. There's still the mentality of, hey, we can implement that too. They don't think about innovation, they don't think about maintaining into the future, but they can take 10 people and simply write an algorithm. The next thing, they're very worried about the data. Look, there's security breaches, there's issues all the time, but there are solutions to the problem. And thirdly, they have to invest money in an architecture that will provide value only when people like me will come in and integrate. So they have to put a large sum of money to create interfaces for general purposes. So not all banks are ready to do it. But I'm seeing more and more banks, again, especially in North America, where I'm coming from, that they are building infrastructure for the purpose of providing data-intensive services with third-party partners.
So what's the message, just throughout to all you guys, what's the message that can be brought to one of the banks? Well, I mean, you're in the bank, like what?
Well, I'm in a bank, so it's not so easy for me to tell. Well, first of all, let me say that there is a very confused picture of what the banks are at the moment, okay? So the general consideration that is done, well, banks are not moving faster like they have. Banks are not looking at real digital transformation, are not enough agile like Fintech and other organizations. That is partially true. Surely it comes from the structure of a bank. If you think about Barclays, HSBC, Lloyds, big banks in the UK or all over the world, well, the digital transformation, I think the digital transformation view and vision is clear in the mind of the top management, but also in the mind of the people working in every department. But the transformation itself is something more complex. So the digital transformation of a bank passed through a change in the organizational structure, passed through a change in the number of resources employed, passed through a number of changes that will affect people within the organization, both at power level and for the job that they have in some cases. So when we talk about introduce artificial intelligence algorithm instead of an advisor, this is a person, well, that person will need to do something else or will be fired. When we try to move activities that were done by several teams, finance, risk, into a centralized structure that will manage data and algorithms on top of them, well, someone will lose part of the power that they have in the organization. So there is surely a harder implementation roadmap for this type of transformation in a bank. Also, if the vision is pretty clear to everyone. What I can suggest, well, Barclays is already doing an important investment in transforming itself in a digital bank or in a new banking model for the digital era, and it is a mix. It's a mix between a top-down approach. You have the top management fully aware of what is the roadmap, what they need to achieve, which is the vision of a new bank to survive in the market, but you must have also the bottom-up approach. So people need to buy in the vision. The vision needs to be pervasive internally in the company. Everyone needs to follow that. Also knowing that that will means that someone will lose the job, some area will lose the power, some structure will be merged into new structure. So the entire system will be transformed. But at the end, if you look what the banks are doing, well, we are doing a business that at the moment is not, could not work anymore. In a digital era in which people is looking to have products and services with a near zero marginality, bank could not continue to have their structure as they have. And they need to shift to something more similar to a fintech, but with the problem that they have an organizational structure designed and created over 15 years, 1,200 years to do something completely different. So it's very hard. It's not that they don't want, it's that it's hard.
But companies like, so not everyone knows, but like Match.com that spun out Tinder. So Match.com created Tinder and is now worth more and bigger than the parent company. Why aren't banks doing the same thing?
So some of them are setting up digital outfit and are establishing new things, but right now it's kind of difficult for them. We are involved with one of them, and what they did, they decided to launch something completely new core banking system. So they said, okay, new team, new place, new core banking system, and now they started from scratch building services. So this is an interesting one because they took out a lot of the constraints of coming from a big bank. They obviously can only start with very simple products in the beginning, a checking account, and only build on top of that. But I think that the outcome could be very interesting for that bank. I still believe that the biggest issue with an approach like that they will do something like that, it will be contained separately, and then they will fail to take the DNA back into the mothership. So either this innovation will die because the management will come in and say, hey, I want to own it, or it's going to be too small to affect the big bank. So I think they are definitely in some sort of a bind because they are too big, they're too complicated. But I still believe that right now, today, one of the best approaches is to start and create new types of products that will be powered, from the beginning by new data and new core banking system to allow people to engage. And that would be a tremendous shift. I'll just finish up with one small example. When you use the free services of Google, you have all these disclaimers. I'm not sure if people read them. They're going to kill you. They're going to take your data. They're going to sell it. They're going to do this. But you say yes because you like their services. If that bank will come in and say, I'm going to give you this account and it's going to be zero in terms of fees, but I can use you for testing, and I can open up services, and I can send you messages, and you will respond to me. How many people will, they will have a great testing tool, but they don't do it today.
I had one complication. The bank will not be allowed to do it because we have regulators with a strong compliance and regulatory framework to be supported. That is something that fintech at the moment still not have a lot, and pure tech still not have at all. So it's very easy for a fintech to deliver services that are faster, easier, and smaller and smarter than the bank. But when the framework will come also to them, the game will change completely. We have IML, we have Know Your Customer, we have regulatory requirement. In each country where we are operating, they are different. So the overall structure of a bank is so complex due to the fact that we are strongly regulated.
But surely, even in a regulated environment, if me as an individual goes to a bank and said, I'd like you to use this data, and you can process it to benefit me, surely that would be allowed.
Sure. And this is one of the paradigms in which banking is now pushing a lot. Well, we all recognize the power of data as a currency. So it's something that could be used to exchange value between the customer and us, and could allow us to give to customer services and products with a lower price because we can leverage on the data economy. Okay, but if the data economy could not be embedded in our regulatory framework because, well, the user wants to do it, but I cannot because the regulator will not allow me to do it, it's something completely different. So the game is changing again. I'm not able to play at the same level of other companies.
So I think we talk to a lot of corporates in different verticals and different industries, and then we see a big difference in how they're set up. So we have customers like UPS, which is one of the biggest logistics companies with 450,000 employees. So they are probably also pretty complex. Nonetheless, they have set up a very nice structure, and we also have, for example, MasterCard, which have done the same, and we see a lot of other guys that have not succeeded in doing that, and what they tend to have set up is some kind of infrastructure, or actually more on a personal level, a strategy department or something very close to the management that actually has a completely different goal that you would normally see. So it has a budget that is completely separated from normal business, and the main goal of these units are to actually learn for the company. And that, at least what we see, has worked very well because it's not connected back into the main business on sides of revenue or all these things, but actually bringing learnings into the organization, and that makes it very, very easy to interact with them, and actually also makes it very attractive for companies to come work with them. On the other side, if you look at other companies, we also deal with for example, a German bank that set up similar kind of innovation unit, and then the first discussion is, we see 1,300 startups a year, and we go into discussion with 300 and and 8 of them turn into a pilot, and which is similar kind of argumentation you hear from a VC normally, which is nice, but turn that around, and then I'm like, yeah, so I have a 8 in 1,300 chance to get to talk to you, and then I don't have the time for you, I'm sorry. right? So it's very different how you actually set up the people and the unit on what their goals are. And I see some very big, complicated companies actually succeeding very well in doing that.
I saw a lot of failure as well, especially in France, on the relationship between banks, especially banks and fintech. This is you obviously know the movie the Monkey Planet, La Planète des Singes en français. C'est ça, Monkey Planet? Yeah, this is
Planet of the Apes.
Apes.
Planet of the Apes.
Okay, Planet of the Apes. Okay, this is this phenomena I've seen several times. That the fintech.
The new one.
Sorry.
The old one or
The new one. You know, there are cool labs with cool scientists who are working around new DNA to inject on the monkey. And the monkey is small, begin more intelligent, and he want to escape. And he begin to be a bit aggressive towards the company. And then the board decide to kill the monkey. And this is the beginning of the movie. I never see the end because I fall asleep. And I saw this phenomena in France and sometimes in Europe several times. Is that there is a lot of curiosity from banks toward these small fintechs, this new artificial intelligence and technology and those cool people without. But when the fintechs begin to grow, it is quickly considered as a threat, just because people, they don't want to lose their job, their old process, the old way of making business in finance, and yes, this is a monkey phenomenon, I can say.
Anatalio?
So I think the narrative of the conflict between banks and fintech, that the fintechs are going to eat the lunch of the banks, is changing, and now what you're seeing is more as the fintechs are having lunch with banks, right? So I think there's plenty of opportunity for partnership. It doesn't have to be antagonistic.
We are paying a lot of those lunch, so.
Yeah, but I think it's fine. I actually think that the fintech companies also have to take a decision what they want to be. I am actually under the impression that fintechs cannot be everything to all. So we as a company decided not to go and do a B2C. So our brand is completely behind the firewall, and we are suffering from that, but we took a decision to prepare to work with banks. There are other companies that have a different mindset and they want to capture customers. They build everything in the cloud. They use technologies that when they come to the banks faint and say, we will never use it. So I think you have to decide who you want to be. But in the end of the day, banks will have to work with fintech in order to survive. And there are fintechs that will capture some of their lunch and some fintech that will be their partners. And I think eventually it will have to split.
Stefan, you're gathering a lot of data around what people are purchasing. So you're seeing massive trends. What do you see in that world with that new data that's coming in? How's that going to impact the financial services?
So I think it's a matter of course, having access to new kind of data, which wasn't there before. So what we do is we help basically standardize transactional data. So we give, for example, consumers an opportunity to keep track of all of their purchase history, which can essentially trigger a lot of very interesting things. You can essentially do an asset account, which can give a loan to a consumer based on the value of your purchases. You can do a lot of very interesting things around that. I think what is very important is also to actually have these kind of different solutions very closely integrated with the end consumer. So this might be a consumer or a merchant. We work on the transactional side on both sides. So what is very important, I think, is first of all to get access to that data to a certain degree and see and understand what kind of small data points can actually trigger something, some kind of service, and then it's important to get that in front of the consumer. So what we're seeing a lot of companies that come to us and work with us on actually getting access to the data and then putting that in front of either the consumer or the merchant at the right point in time where they are actually at. So. And I think we've done this in other verticals, and now we're currently starting to work with companies in fintech around this. And I think it's something that most people have kind of forgotten about. It's become a lot about big data, but most of the time, once you looked at all the big data, it's a few kind of data points that are really important, and it's more about then actually putting the service that you want to trigger based on data in front of the customer at the right point in time. So essentially, to give an example, some of our customers, they actually put, for example, credits directly in the checkout on online stores as a very simple example, but something that wasn't really possible with that kind of UI some years ago. So a consumer can get a credit directly in the checkout when he buys something, for example. Or we have some of our customers that actually, after a consumer bought something, give the consumer a credit on the purchase after he bought it, because he knows, the bank knows, or the company knows that the purchase was made, so he can actually give a credit after it was even bought. So yeah, that's it.
So a lot more behaviorally driven.
Exactly. So what we look a lot at the purchase kind of timeline, and looking at what happens to buy something and then trigger the right services at the right point in time. So you have a natural kind of thing. You buy something, and at that point you need a credit, and then specific things happens afterwards. Maybe when your mobile phone is a little over 1 year old, you're probably going to want the new iPhone 8 that's coming out. So you can actually create some very nice service around that, and know that the consumer is going to want that, and give him a credit pre-approved already. Maybe with him exchanging his own mobile phone around that. So looking at that timeline can basically give a lot of knowledge on how you can position these services.
Anatalio, what are you seeing in the small business sector? Obviously, you're tracking a lot of data there. How does that influence or impact the banking relationship?
So I think the first thing is to see the big difference between data for big businesses and small businesses. So big businesses, they have access to a lot of data. They can have management consultants analyzing it. They can have internal analysts looking at that data to make smarter decisions. But small businesses, they are the information have-nots. They lack information, they're typically unsophisticated. They didn't start their business to be involved in data, but it's still so important. But in an information economy, those without information are really at risk of a stunted economy. And so I don't see data-driven decision-making as something of the future. It's clearly the now, and it's going to become even more important into the future. And what that means is that for small businesses, they're at a big disadvantage in a situation like that. So I think that banks, financial institutions, and fintechs really can have a role in helping it with that by providing them data and insights, first even to their own data that exists within their company, and then also to third-party data or market research or business intelligence that the small business could never afford or understand on their own. Just as 2 case studies of projects that we're involved with. If you go to wellsfargoworks.com, which is a small business platform, or a project that we launched with Deutsche Bank this year, they're having platforms to really help the small businesses, in the case of using SizeUp, to make smarter decisions through data and to access that type of market research and business intelligence. And what this does is it also transforms the relationship between the bank or the financial institution and their small business customer, because they're really trying to be an authentic partner. They're trying to help them be successful with some of the key things that they need to succeed. And it's mutually beneficial, right? Because if they're helping the small business succeed, then that small business can become a big business, and they're going to need new financial products and services. But really, it leaves a halo on top of them as a really a partner. And part of that partnership is delivering data insights that small businesses just don't have access to.
So to build on that, David, what are you saying? Because we've got all this rich data coming into like the banking institution. How does that really transform the customer relationship? That's really where the rubber meets.
Well, depends how they use it, right? So one of the things that I think is kind of interesting is how aggressive they are using the data and for what purpose. So when we come in and we talk about insight to customers and recommendations, I always put a slide there and I say, this is not sales. And the reason that I put it, because we always have the marketing people in the room asking me, can we use it to promote products? So the first thing I would say with using of data for banks, don't use it to aggressively push your product, because you're going to take things actually backward in terms of the relationship. People like you to use your data to help them, but if you try to use it in order to immediately push product, you're going to get burnt. The second thing that we have noticed is that customers are building the trust slowly. And so the way that our system works, but I also think it's a good idea for everyone, is to start small with things that are guaranteed to win. If we tell you that you have a subscription renewal from Financial Times that you didn't notice, that's a guaranteed win. You're gonna like it. We did it for you. There's no argument. There's no fees. That's great. However, if I come to you the day after and say there's a credit card that I think you should use because you're traveling, well, am I selling to you? Am I advising? So I think you have to, first of all, understand the customer approach and look at some of the behavior economics ideas behind how to approach. And then when you take your data and you develop these insights, you can actually apply a very strong strategy. From our perspective, the win is a behavior change. So there are banks that have acquired a lot of customers by using low fees in the current account. Or in the UK, high interest in the current account up to £4,000. But then they're stuck. Customers are not using the other products and they have so many alternatives and they're not really developing that relationship. Data is a very powerful thing and you can use it to impact behavior, but you have to keep away the traditional CRM and next best offer capabilities that they have, not to interfere with this one-to-one insights that you can generate with this type of data.
So I've got one question before we open to the floor to you, Christian. So a little bit further out there and a bit of a passion on your side of things. With this new rich and big data, what is it? I mean, is there opportunities for better social inclusion? You know, will we solve poverty through data?
Yeah, well, sure, it could. Well, let's start with the power of the digitalization. We have about half of the population in the world in the age to be banked that is unbanked. So formally, half of the adult population in the world has no access to financial services. And that means it's not able to save, borrow, spend, and insure through any normal channel or standardized channel that we recognize as the official one. But already now, in these days, about the 50% of them has already a connected device. So financial services or insurances were not able to hit this part of the population because, well, they were living in a place where it could not be a chip, but they have now a connected device that could be their branch or their agency. And we were not able to hit them because we didn't have any information on them. But with the interaction with digital instruments and the fact that their life will start be encoded into digital stream like the life of everyone else, we can design new algorithms and new logics to score them, or let's say to profile them, and propose to them the opportunity to access products and services, or to have better condition to access them if they are already if they are already accessing them. And the same also in our economies. If you think about, well, a lot of us is already using financial services products, but how many of us is convinced that they are accessing the best product and the best service, or the product and the service for them at the right price? We don't know, okay? We all have the sensation that probably sharing more, giving the opportunity to know us a little bit more, we could have better condition. And that's part of the financial inclusion. We can improve the inclusion of people not accessing products and services, just building new logics on top of data that are there or will be there in the very next future with the digitalization of our life. And we can improve what is already there for people that is a lower banked or with few usage of these services, giving them better services and better products.
Yeah, so I think that there's also a connection to this issue of equity, right? So there's going to be data winners and losers. I mean, there is a divide there. And so, for example, if we have a problem, I say, okay, you have access to the internet and you don't. Who's going to likely come up with the best solution? Or we see the same thing with, you have access to good financial data and you don't. Who's going to come up with, the better way of doing it? And so who are going to be the losers? The losers are likely going to be the poor, the small business, the data poor societies, the less educated, the non-connected. I guess you bring up a great point, which is the issue of more people are getting connected, and that's good and that's positive for inclusion. But data can be empowering or disenfranchising. And I think that all of us, have a moral obligation to figure out how we can best meet the needs of everybody.
Brilliant. Guys, thanks very much for taking the time today to be here, have this dialogue, and look forward to continuing on stage. Right. Thank you.
Thank you.